Were you aware that star investor Cathie Wood recently explained Tesla's future? Wood is a known Tesla bull, and her valuations for the company are that of a very optimistic investor. Make sure to stay tuned and keep watching to find out what Cathie Wood has to say about Tesla's future. Whether Tesla is undervalued or overvalued remains a subject of debate. The EV company's stock has recently experienced a dip, which has caused concern to its investors. Despite this, a lot of Tesla bulls believe that the company's stocks will soar soon enough with all the innovations the EV company has up its sleeves. In today's video, you will find out what Cathie Wood has to say about Tesla's future. We just published a report with our long-term forecast, and the numbers have gone up dramatically, and yet we think it's incredibly undervalued. And the reason for that, there are two assumptions that have changed in the last couple of reports, says Cathie Wood in a recent interview. Who is Cathie Wood in the financial industry, and why does it matter what she says? According to Forbes, Cathie Wood, an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving cars and genomics. Cathie Wood is often called the most underrated investor in the game, since not only is she incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. Cathie Wood provides monthly updates about several things like monetary and economic policies, innovations, what can be expected in her field of expertise, and comments on the Fed's decisions. The Federal Reserve System, commonly known as the Fed, is the central bank of the U.S., which regulates the U.S. monetary and financial system. ARK Investment Management LLC, or simply ARK Invest, is an American investment management firm based in St. Petersburg, Florida, that manages several actively managed exchange-traded funds. ARK Invest focuses solely on disruptive innovation and offers investment solutions to investors seeking long-term growth in the public markets. As of February 2021, the company had $50 billion in assets under management. ARK Invest was founded and is managed by Cathie Wood, an American investor who is often called the most underrated investor in the game, since she is incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. While there has been news of Wood selling her Tesla stocks earlier this year, she is back on the Tesla bandwagon after buying more stocks during the dip. In early June, two of her exchange-traded funds scooped up Tesla shares. ARK Next Generation Internet ETF, ARKW, bought 1,107 shares, and ARK Autonomous Technology and Robotics ETF, ARKQ, bought 1,893 shares. According to the latest research report from ARK Investment Management, Tesla stock is expected to trade at $4,600 in 2026. This is approximately 7 times the price at which the stock of Elon Musk's company is currently trading. Cathie Wood has seen her growth-heavy portfolio steadily lose billions in value over the past few months, as interest rates rise and batter risky stocks. The portfolio value of her equity holdings has dropped from $33 billion at the end of December 2021 to around $23 billion at the beginning of the second quarter of 2022. During the period, Wood made new purchases in 38 stocks, sold out to 46 firms, made additional purchases in 140 equities, and reduced holdings in 167 stocks. Some of the top stocks in the ARK portfolio at the end of the first quarter of 2022 included Tesla Inc., C Limited, and Roblox Corporation. Despite the beating that ARK Investment Management has taken, Wood has doubled down on her growth bets. At a recent appearance on a webinar, Wood attacked the central bank for being too aggressive with a hike in interest rates, noting that the global economy had already gone into a recession, with stock volatility a sign of investor panic in this regard. Wood highlighted that there were a lot of indicators of a looming bear market, with investors trying to short innovative firms a prime example. Wood claims that these shorts will be forced to cover their positions. Tesla has consistently been Wood's largest holding over the past year and change. It helps that the stock moved up in 2021, a year in which many of her other large positions retreated. ARK evenly routinely sold shares of the electric vehicle maker using the proceeds to water her weeds. During the dip, down 43% from its high, Wood is a buyer again. Tesla is still dominant in the EV market, despite most major car manufacturers now aiming at that market. Tesla has the right product for the times, with gas prices out of control and rivals unlikely to catch up to its proprietary supercharger network of charging stations. Global sales of electric vehicles doubled to a record 6.6 1.6 million units in 2021, and the momentum continues. EV sales climbed 75% year over year in the first quarter of this year. According to the International Energy Agency, and the leading EV manufacturer is Elon Musk's Tesla. The first quarter was a record sales quarter for Tesla, and its operating margin also jumped by more than 4 percentage points year over year despite surging raw material costs. Wood is hugely bullish on EVs and bullish about Tesla. ARK Invest's latest stock model pegs Tesla to be worth a whopping $4,600 per share by 2026. As earlier mentioned, up about 560% from today. Tesla stock is currently sitting at $721.64, which is up by 0.2%. Wood is backing her optimism with regular purchases of the EV stock. It is the largest holding across all ARK Invest ETFs combined, with a weighting of 7.23% across all of them as of June 21st. Do you think Tesla is overvalued or undervalued? Share your thoughts in the comments section below. According to Cathie Wood, one of their bull cases for Tesla in the old model was that it would lose 1/3 of the market share it had in 2018, which is 17% global market share, including China, that it would lose as the EV company's competitors came into the market. However, the share increased to 18% in the past year. When asked about her thoughts on large corporations competing with Tesla in electric vehicle production, Wood has this to say: "They are failing miserably." According to her, they are failing on the battery technology front, as they are not riding down the consumer electronics cost curve which Tesla decided to run down. She noted that at one point, people made fun of Tesla for putting cell phone batteries at the bottom of the car and that the same phone batteries tend to explode. Wood explained that Tesla uses a lithium-ion pouch, which is much more costly than Tesla's consumer electronics batteries. Thus, if companies decide to compete with Tesla, they'll have to sell every electric vehicle at a loss, and at the same time, they're losing their internal combustion engine business. Wood said that the reason why Tesla is so far ahead of its competitors is that those companies have just gotten started. She said that what they have delivered so far are cars that don't even meet the range or other metrics of Tesla's Model S. ARK Invest CEO said there are 3 other advantages Tesla has. The first is batteries. Second, they have their own artificial intelligence chip. Wood said that when their analyst James Wang, who worked at NVIDIA, an artificial intelligence company, for 8 years looked at the specs of Tesla's chip, he was in awe. Wang said that Tesla is 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. This is important in going autonomous with electric, which is Tesla's goal. Going autonomous has everything to do with artificial intelligence projects, and the winner will have the most data and the highest quality data. Tesla has 14 billion miles of real-world driving data today, and the closest competitor, Waymo, only has 20 million. Finally, Tesla's advantage over other companies is that it is the only automaker still that delivers over-the-air software updates to modify performance. Woods further stated, "Within the next 18 months, 2 years, the price of an electric vehicle is going to drop below that for a gas-powered vehicle for the first time. And it will continue to fall because we're riding down the battery cost curve decline, and so the traditional auto manufacturer, if you look at their R&D budget." Wood referred to General Motors as an example. She said, "Looking at GM's 10% of its R&D, $25 billion is allocated to electric. They should be at almost 100% now, given what's about to happen." Wood believes that the reason Berlin, Germany invited Tesla to build a factory with 200 football fields, either soccer or football, that big, is that they know they're in trouble since they've got to adjust and they're going to lose a tremendous number of jobs. Make sure to subscribe to Tesla stock and watch our other videos for more of this content.